In 2019, sellers were begging for buyers to come about, and sales were closing anywhere between 20 and 50% below asking price. Fast forward a couple of years, and there's an absolute frenzy happening in the Cape Town property market, particularly along the Atlantic Seaboard and CBD in the short-term rental market. Prices are skyrocketing, investors are chasing quick returns, but are we heading for a fall? Today I'll be unpacking why I believe the short-term rental bubble presents real risk and why I'm doubling down on long-term investments. So let's take a quick look back to 2019 when there were areas in Cape Town, particularly the CBD and Atlantic Seaboard, that were faced with an absolute shortage of buyers. Many new developers with new products actually had to start renting out their products because they couldn't get them sold. And in the same sense, sellers were having to discount their prices between 20 and 50% to get their properties sold. In this time, many luxury units and new properties were actually converted to long-term rentals in favor of selling because they simply couldn't achieve their asking prices. This put pressure on those rental prices. Along with this, the demand for short-term rentals was lackluster. We also entered into a period of COVID where that short-term demand was essentially crushed. So let's fast forward to 2025, where a surge in short-term rental demand, particularly areas like the Atlantic Seaboard, have driven up property prices. As of May 2025, Cape Town hosts approximately 11,000 active Airbnb listings. With high occupancy rates in the short-term lets, both foreign and local buyers have shown huge interest in the short-term letting market. Properties that are purchased solely with a short-term yield. The median occupancy rate, however, sits at around 47%, with top-performing properties achieving up to 88%. That's according to AROI. Now, the problem I have with this is that the properties aren't being purchased with long-term fundamentals. And we'll have a look at this bubble and why I believe that there's some warning signs. So to summarize, in 2019, properties were pretty hard to sell with very few buyers and very little interest in short-term lets. This forced owners of properties to convert their properties to long-term lets. And today that scenario has completely changed around. Long-term lets are, people can't achieve and can't afford to pay what they need to pay to secure a property for a long-term let. And there's a huge demand for short-term rentals. This recent performance has driven up the interest from both local and foreign buyers who are buying properties for short-term letting purposes like Airbnb with one sole focus of yielding short-term returns. So in evaluating these short-term yields, one cannot argue that these properties are seeing between 30 and 50% higher income rates than what they would have seen on long-term rentals. But remember that these returns are subject to seasonal fluctuations and they come with increased operational costs. One of the biggest costs I often see people discarding when reporting figures for Airbnb is the value of their own time and putting that in an actual cost. Answering calls at 9 o'clock in the morning when a kettle is not working, or even subcontracting that function, comes at a cost, and those costs should always also be reported. Some quick figures for those of you that are interested. The Cape Town market currently sees about 380,000 Rand per annum average for Airbnb hosts. That stands at an average daily rate of 3,300 Rand with a occupancy around 47%, as we've mentioned already. As I've mentioned, these management demands that come in addition to the traditional property investment need constant attention, including guest communication, cleaning, maintenance, dynamic pricing strategies. And very often people overlook the energy and time and value that you are adding to this process. So that also needs to be costed, and something that I think people often overlook when stating their returns on Airbnb properties. If you were to subcontract these costs, it will have a huge effect on your net return. So are we in a bubble, and are there any warning signs that we should be looking out for? One of the biggest warnings that we need to look out for is the local resident being priced out of the market. This is something that's been reported on quite substantially in the market and has become a talking point where local South Africans who need to live in Cape Town to work and live their daily lives feel that they cannot afford to live within the CBD or the Atlantic Seaboard any longer. Driving out local residents means that you become solely dependent upon investors who are solely dependent upon a short-term letting market. So, with only short term rental investors fueling your market, no one needs to explain to us the risks involved with things like that. We saw what 2020 and the COVID 19 lockdown brought about, the effects that had on the property market in the short term letting space. And while that might be a once in a lifetime event, that just shows us how volatile these markets can potentially be if they are dependent upon one certain market segment. It's a fragile market already. And along with that, there's been increased scrutiny with likely regulation coming. This is not unique to Cape Town. It's not unique to South Africa. Airbnb has been a huge disruptor in the property market worldwide, especially in areas where there are high demand for short-term leases. If we just do a quick Google search online, you'll find many cities around the world implementing legislation to either stop Airbnb completely or limit the effect that it has on the local population. As we speak, Cape Town is currently exploring regulations to mitigate the impact of short-term rentals, including potential taxes and occupancy restrictions. An over-reliance on short-term rental income may become risky in future, especially, as I've said, if local buyers are priced out of the market, leaving the market completely dependent on a single demand factor. Another regulatory change to look out for is that of the income tax. SARS is cracking down on underreported income, with property rentals being one of the spaces where income is being understated. So in conclusion, while short-term rentals may indeed offer exciting returns, they always need to remember that they come with an increased risk and operational requirements. So let's refocus our energy to the long-term investments that Cape Town has to offer. And I'll state the case as to why I believe the Cape Town suburbs provide stability, consistent growth, and align better with the traditional investment strategies used in the property sector. Areas like Durbanville, Brackenfell, Kuils River, Century City, Rondebosch, Claremont have all shown consistent demand. Over the past 15 years, we've seen constant growth of around 7.5% to 8.5% capital appreciation in these areas. Rental yields typically start at around 8% in year one and then average out to about 7.5% in these areas. All of these suburbs have shown long-term growth, consistent demand, because they fall in a middle income market with an excellent rental pool, good access to lifestyle amenities, schools, and work hubs. So if you're looking for a side hustle or hospitality business, Airbnb or short-term rentals might be what you're after. But if your aim is long-term wealth creation through real estate, the suburban market offers you low volatility, stronger tenant demand, bank favorability, and less exposure to policy changes. So don't be lured into the high yield discussions of short-term rentals without understanding the operational costs, potential hidden costs, and the true risk involved in buying one of those properties. So the best real estate returns are still being made by those who build slowly, surely, and smartly. So make sure that you understand the use of leverage, understand the macroeconomic and location dynamics, and let time do the heavy lifting on your part. So if you're considering entering the Cape Town property market and you're looking for good advice and not just hype, reach out to me and book a consultation, whether you are a first-time investor or someone looking at growing your portfolio, whether you're in South Africa or sitting abroad. My advice and time is free. I'm willing to give you that advice. Book a consultation and let me see if I can change your mind and maybe challenge some of the thoughts that you may have had about entering the short-term market. I'm doubling down on long-term investments, and I hope you're doing the same.